right, let's interrupt that. And the latest breaking news is Wipro is out with its Q1 results. 3240 crore is the PAT that has come in. At least on the face of it, it seems to be a significant beat from what the poll had anticipated. Poonam is joining in. She's been looking through the numbers already. Poonam, what are you picking up?
Well, it's certainly a beat in terms of the revenues front. I'm just going through the numbers as I speak to you. Consolidated revenue at 18,252 crore. It's a growth of plus around 12.4% on the consolidated revenue front. Consolidated PAT has come in at 3248 crore, growing in nearly around 9.2% is the growth on the consolidated PAT front. So I would say so far, just on the consolidated revenue as well as on the consolidated PAT front, it's a beat there. I'm also, as I speak to you, I'm also going through the numbers. In terms of the IT services revenue, the total IT services revenue itself stands at 180.48 crore, and which is a growth of plus from 13.6%. This is versus a 158.92. So on the IT services revenue front as well, it's a beat coming in from Wipro. In terms of the IT services EBIT margin, we're seeing the EBIT at 33 crore, which is again, its EBIT for IT services is in line with the estimates. We were expecting a number of 3380 crore, but it's in line. So I would say they have done fairly well in terms of the margin front. I'm looking at the margins, and yes, there is obviously a decline in the margins, but that is expected because all the industry players have so far stated that they are seeing rising attrition levels, and they've gone ahead and also done wage hikes, etc. So that is likely to put a pressure in terms of the margins front. I'm still trying to pull up the press release there, but so far it's a beat in terms of the revenue front. It's a beat in terms of the consolidated profits front. EBIT number, not the margin, it's the EBIT which I'm saying is fairly in line with the estimates. The margins have dipped on a sequential basis, and so far my calculations does show that the margin dip is slightly higher than expected. Do know that Wipro, with this kind of growth, they have reported the industry leading growth, and this is because this quarter includes Capco acquisition. And as I'm looking at the press release, the operating margin for the quarter is at 18.8%, which is far lower than what we were expecting. We were working with a number of 19.4%. Also, if I'm looking at the overall revenues, as I said, the dollar revenue for IT services stands at 2414 crore, which is a beat in terms of what we were expecting. They have done far better, even in terms of the guidance. They had guided for a dollar revenue growth of 8 to 10%, and I'm getting a growth of 12%. So they have even beaten their guidance in Q1 in terms of the IT services revenue. Okay, Amit, what is your first take? I'm looking at the numbers, and it looks fairly strong. And before I even come to you, Amit, I just have one more update to give you. The outlook, which is the guidance, they're stating that we expect revenue from our IT services business to be in the range of growth of 5 to 7%. This is this is for the Q2 guidance. They're expecting revenue growth of 5 to 7% in Q2. Revenue range is at $25-35 million to $25-83 million. Amit, what's your first take on the numbers as well as guidance?
Yeah, so on the numbers front, it looks quite strong numbers. So we were expecting around 9.5-10% growth. So that was including the acquisition of Capco, which was expected to have an impact for like 2 months. So around 6 to 7% was coming from that. So the organic front, it was around 3%. So I think there is a beat on that front. And on the margins front, I think it's in line because the Capco acquisition was having an 200 bips impact on the margins. So I think margins drop is in line with what we're expecting. But what is the guidance for the guidance for the next quarter is also 5 to 7%, which I think also includes the inorganic Ampion acquisition and another incremental 1 month of Capco. So we'll have to see what is the organic organic guidance. So I think that is in the range of around 3%. So that is in line with what we're expecting. So overall, strong set of numbers for Wipro. So I think the guidance is strong, and the margins drop was expected. So we have to see how the deal wins have been for Wipro, because the most important thing for Wipro was the massive deal wins that they have seen in the last 2 quarters. So that number will be interesting to watch.
If I'm looking at the overall sector mix as well, we are seeing a revenue growth in constant currency terms that stands at nearly around 12% on a sequential basis. And also, if I'm looking at the overall customer concentration, well, that's been fairly good. The gross utilization stands at 77.7%. Attrition is at 15.5%. Attrition has definitely risen strongly during this quarter. And also, if I'm looking at the overall growth parameters, well, they seem to be doing fairly well in terms of the growth numbers. It seems to be a good amount of broad-based growth during the quarter. Also, if we are looking at in terms of the customer size distribution and also the customer concentration, that seems to be doing fairly well. One question quickly, just in terms of the valuations. The stock is trading at nearly around 23x FY23 price to earnings multiple, and it's a very, very strong guidance coming in from Wipro. Across the board, we are seeing very strong guidance coming in from most of the IT players. Do you think that with the kind of performance and with the kind of guidance that they have shared so far, there is a possibility for further re-rating of the stock even from the current levels?
Yes, so obviously, we have seen, massive re-rating in the stock in the last 1 year. And if you see in terms of the performance, Wipro has been one of the best performing stocks in Tier 1 IT. So in terms of valuations, you're right, it's around 22.5, 23 times FY23, which is still at around 15% discount to what Infosys is trading, right? So with this kind of acceleration in growth, I think there is further scope for the earnings to get upgraded, and the gap between Infosys and Wipro can come down, because historically they have been traded at this discount was around 5% also, 5 to 10% range. So I think with growth, the scope for multiple expansion is always there.
What is your Sudheer, what is your first take in terms of Wipro earnings? It's a very strong guidance coming in from Q2, as well as we're seeing Wipro delivering a fairly strong growth. It's at the top end of their own guidance for Q1. Profit is a beat on the profit front, and it seems to be a fairly broad-based growth there.
Yeah, so on the revenue front, definitely revenue is higher than expectations, and IT services margins are tad lower or more or less in line with the expectations. So overall, my initial reading is that it's a good result. And in terms of the guidance, we'll have to see what part of it is inorganic component and what part of it is organic growth guidance for the next quarter. Probably we should get that clarity from the management on the call. Then we'll be able to take an assessment as to how the subsequent quarter is going to progress on organic basis.
Your sense in terms of the valuation, Sudheer?
Yeah, so the initial signs of let's say a turnaround are look promising, but we'll have to see how this exactly pans out going forward. And for the broader sector at this juncture, I would be a little cautious in terms of the valuations because it looks like at least based on our analysis and based on the interpretations that we have, it looks like we are coming of the we are in the recovery leg, or we are coming of the cyclical lows. So we'll have to see the durability or sustainability of this growth into the medium term, even beyond FY22, because FY22, as I highlighted earlier in some of the earlier conversations also, FY22 will look robust for everybody given the low base impact, right? It's essentially a recovery leg. We are coming off the cyclical lows. We'll have to see how durable or sustainable this growth is going into the medium term. So valuation is a more a function of it. So we'll have to wait and watch. Any which ways, at 23-24 times, I think the better way to look at it would be in terms of the historical valuations of the company. And of course, compared to the historical growth rates, there is a bit of an acceleration in the growth rates we are seeing. Before actually jumping to a conclusion,
and care of their family.